Thank you. Thank you very much for the kind introduction. And it's great to share a panel with two experts in regulations. Eric kept saying that it was his easiest job. Today is actually my easiest. The easiest job among the three of us would be mine, because I'm just going to be a moderator, and the difficult questions will be answered by William and Elizabeth respectively. So the Financial Service Development Council, unlike the Securities and Futures Commission in Hong Kong, which has already picked up the issue of crypto-related matters in 2018, we only started looking into it back in 2021. And that was when I started working very closely with Elizabeth on this matter. To us, Hong Kong is an international financial center, and we can't just leave behind an emerging and potentially the future of finance, going forward. And that's why back in 2021, we thought we shouldn't be limiting the access to crypto to only professional investors. Now, on that note, I would like to ask Elizabeth the first question, which is about Hong Kong's approach to digital assets, which has also emerged and changed over the years. Now, Elizabeth, how has Hong Kong's regulatory philosophy evolved to keep pace with the rapid development of digital assets? And what are the key changes that you have seen in the market in response to SFC's covered and expanded coverage in relation to regulations?
Thank you, Rocky, and thank you for inviting me here today to participate in this panel. So, as Rocky mentioned just now, the SFC first started to regulate this space in 2018. We were actually rather early movers. We weren't the first, but we were quite early. So what we saw was that many jurisdictions were still very undecided about whether they would regulate or not. So the digital asset market landscape was very uneven, and many players were unregulated. So our focus back then and our priority was to create a safe digital asset ecosystem in Hong Kong. So what we did was that we started with a very prudent and conservative approach. So over the years, we have expanded our regulatory remit, and we are regulating more and more digital asset-related activities in Hong Kong. What we did was that we did this through creating a rather closed-loop ecosystem in Hong Kong. So our licensed virtual asset platforms were the central role, played the very central role in our digital asset ecosystem in Hong Kong. So currently, our brokers need to partner with our licensed VATPs. Our SFC authorized funds need to trade through our licensed virtual asset trading platforms, and they also custody their fund assets with the custody entity of our licensed trading platforms. But what we've noticed is that through creating this closed-loop environment, we are creating a pocket of liquidity only for Hong Kong. And that does not connect with global connectivity, global liquidity. So this fragments liquidity for investors in Hong Kong. And because digital assets are borderless in nature, this reduces liquidity in Hong Kong because liquidity begets liquidity. So as part of our roadmap, we had Aspire roadmap. We identified that this is an initiative that we really need to look into. How do we connect Hong Kong with global liquidity? We want to enable local investors to have access to global markets. We want to attract institutional trading to Hong Kong. All this is to be able to foster and to create a deeper and more liquid market in Hong Kong. So yesterday, we issued 2 circulars. One especially is to tap into global liquidity. Through that circular, we are now enabling our licensed virtual asset trading platforms to share a global order book with their affiliates overseas. Now, this is the first step in achieving global connectivity. And this circular was a result of working very closely with the industry, and it actually took quite some time to really, launch. So through the circular, we have identified, the new risks arising from tapping into global liquidity, mainly trading and settlement risks, and also, market misconduct issues. So we've provided more guidance in the circular, and I think why it has taken us so long to, tap into global liquidity to issue this circular is that we've spent so much time with industry because I think they're slowly, recognizing that they need to put on a TradFi hat. They need to understand what TradFi guardrails are necessary to create, a trusted ecosystem in Hong Kong. So this also coincides with what we've seen with the industry, is that they're slowly recognizing the importance and the value of being regulated and also being compliant, as regulation provides the credibility to their businesses. So this is also what we've seen. Basically, that industry is embracing regulation, and this is also in line with our responses that we've received to our consultations on introducing virtual asset dealing regimes and also custody regimes. They want to be regulated. They are very supportive, and they are looking forward to being licensed.
Fantastic. That's a very quick download of what Hong Kong has gone through. Now, Wai Lam, I remember I visited you at ADGM roughly 2 years ago. It was we wrapped up our trip to Dubai. That was part of the COP28 discussion, and then we drove over to Abu Dhabi to visit you and to discuss with you quite a few items. And if I recall correctly, the discussion was pointing to the fact that Abu Dhabi was not really looking into a digital asset at that point. But just like some of those other markets in the Middle East, like you think about Saudi, you think about Kuwait, and some other places, they weren't. But I think Abu Dhabi has done a fantastic job in providing a very secure and prudent, and at the same time very forward-looking roadmap. So I would like to check with you if that was the case, if my memory served me right, and if so, what has changed?
All right. Thanks for having me, and good to see you, Elizabeth. So first thing, I want to correct you. 2021, when you visited us, definitely we are not. Crypto is really a big part of our journey. Just that in Abu Dhabi, we don't tend to promote or market ourselves. So truth be told, in June 2018, we launched our framework. And back then, when the whole world was talking about AML, CFT risk, we thought that we have to go beyond that. So we spoke to various institutional players. The only regulator back then we saw was that has a framework was the Japanese FSA, as well as the New York Department of Financial Services. And even back then, the framework to us wasn't really fit for purpose from our perspective. And the institutional investors are saying, look, the only way for us to come into this space is unless you address all the risks that we see in the space, we're not going to invest into cryptos. So long and short of it, we eventually just decided to extend our TradFi regulations to carve in crypto assets as just another asset class. So whether you are a broker-dealer, custody, asset manager, market operator, payment service providers, as long as you deal in cryptos, we regulate you as if you're a traditional financial services sector. And that was with the vision that we think in the long term, there's going to be conversions of TradFi and NewFi. And I'm glad that we took that decision. It was a difficult one to take because it means that it's a high bar to begin with for a lot of these technology firms. But today, we are seeing the conversions. So if you're a broker-dealer dealing in securities, derivatives, perpetuals, cryptos, so on and so forth, it is one license that you are able to do. It's just we are asset class agnostic. And interestingly, the development of the market has evolved. When we first started off in 2018, the first movers are largely the on-ramp, off-ramp, price discovery people, because back then the individuals are the main users. They're looking for a place to on-ramp and off-ramp. And of course, when FTX hit, there was doubling down on institutional players and custody solutions. And now that you have a safe custody solution, people are looking for you, right? So the third wave of players that we're seeing are the people looking for yield, staking, borrowing, and lending, right? So today in EDGM, we have a budding ecosystem of players from broker-dealers, market exchange operators, stablecoin issuers, borrowing and lenders, as well as staking providers. And we are starting to see TradFi, CFIs, deploying their strategies on DeFi. So it's an exciting space. And for me as a regulator, I see the changes happening every day. And the only way to keep up is to quickly, closely engage with the industry at all times.
This is fantastic. I think I see some similarities between ADGM and Hong Kong's regulators. The background is that we are international. At the same time, we have our very own characteristics. And we also want to connect with different parties and markets. And we want to do it prudently. We don't want to do it very aggressively, just invite everybody to be here, play the games, and like if what hit the fan, then like everyone just leaves, right? So we don't want to see that happen. And to that end, I would like to ask both of you the same question. What are some similarities that you see in our markets? And what are the differences? And how can players that are currently present in one market, how can they actually leverage and tap into the other market? So, Wailam, perhaps?
Yep, definitely I see a lot of similarities, and over time you see the conversions, like I say, into the way we look at cryptos. So I think we use the lens of a TradFi. We look at protection of investors as well as protection of the financial system, right? So I think from that perspective, gradually, in fact, not just between Singapore, not within Hong Kong and Singapore and UAE, there's the convergence of regulatory sharing, mind sharing. Things like asset segregation, protection, market abuse provisions, those are things that's happening. So that conversion is definitely very helpful because it helps firms, as Rocky mentioned, scale. Right? We are starting to see firms looking at, well, in the early years, you can see them sort of looking for an anchor, a headquarters to first build the foundations. But I think the timing is right now where we are seeing a lot more interest, especially from Hong Kong and vice versa, firms looking to scale, right? So that convergence of regulatory framework definitely helps. There will always be differences at the margins because every jurisdiction starts off with different circumstances and priorities. So we do have our priorities. Hong Kong will have its priorities. I suppose I see an advantage in being able to start from a framework with zero legacy issues, building up from scratch, catering to the being more agile to changes. Whereas a lot of established international financial centers already have frameworks and they have to sort of think of how to retrofit or update or tweak their models, right? So I think there will be differences in that perspective because each jurisdiction starts from different starting points. Yeah.
That's it.
I think that I agree with what Wailam has observed in the market, that we are converging across the globe. And I think one of the key reasons is that international standard-setting bodies have also, asked regulators to really adopt a harmonized approach to regulation. So basically now the principle is same activity, same risk, same regulation or regulatory outcome. So this is what we've been applying in Hong Kong, and what Wailam has said as well in UAE, we're looking at TradFi guardrails, bringing it to the digital asset ecosystem. I agree with Wailam as well as that many firms are looking at, anchoring and then scaling. I think right now what we're seeing is that for those unregulated firms, they're also choosing their home jurisdictions. So they're choosing one place to then expand based on that headquarters to expand to other jurisdictions. And I think it's very interesting to see, what really goes into their choice and when they're choosing a jurisdiction. And I think what we're seeing more and more is that they also value regulation. So they understand that they need to choose a robust jurisdiction so that they can give credibility to their investors and their clients. And then through that, they can further scale to the rest of the world. In terms of tokenized assets, I think we're also seeing that across the globe, regulators are also adopting the same kind of stance. So that basically we look at the asset itself. It's a security. We regulate it as a security. We use the same TradFi guardrails. And I think this is also gaining momentum across the world. And it's also something that I think for, TradFi, they're also looking into it because it's something that they know how to do. So we're seeing that every firm, whether it's in the crypto markets or whether it's in traditional finance, they're really focused on the digital asset ecosystem now.
This is great, because we have to have a fine ecosystem that connects traditional finance with the emerging industry, or perhaps now it's a mainstream industry, and subsequently we also need to connect with other markets. Now, in Hong Kong, that's a difficult question for Elizabeth, I think. So OSL, got the first license. And the second license didn't come through until a while later. Then we have batches of license approval. What took you or your colleagues so long? That's the first question. And going forward, how can we ensure that while we are going to play by the rules, and how can we ensure that the ecosystem is continuing to grow sustainably?
Right. So we do admit that the licensing process for our trading platforms have taken quite some time. I think partly it was, especially when we started off with OSL, it was really a learning journey for us regulators to understand, what exactly is the digital asset market? What are they doing, right? So we worked very closely with OSL in working on the license. I think for subsequent licenses, what we've seen is that, again, we used the same kind of approach. We were very, coordinative and a collaborative kind of approach with our applicants. But what we've seen is that in the industry, there's still more of, we're from the crypto world, we're not part of TradFi. So it's been a learning journey for the industry as well to really understand what TradFi guardrails are necessary for them to operate in a compliant and regulated manner. So we're not talking about OSL, but we've seen applicants that have submitted, perfect policies and procedures on paper. When we actually go in and look at them, they haven't actually implemented them, or they've implemented it completely differently. So it's these things that has taken so much time for us to, work with them, rectify the issues, and then hopefully they understand where we're coming from and they know how to, be compliant and regulated in the future. So what we're doing right now in Hong Kong is that we've issued, 2 consultations with the government to further complete the ecosystem in Hong Kong. We're looking into licensing virtual asset dealers, virtual asset custodians, in order to, make sure that every part of the ecosystem is regulated. Because we think that through regulation and through compliance with regulations, we can create a sustainable market in Hong Kong. So right now, for our dealing consultations, we've actually received quite a lot of comments that maybe we should also extend to regulating virtual asset advisory services and also virtual asset fund management services. So we're now working very closely with the government to see whether we should also, do these pieces to fully complete the ecosystem. And I think once we do have this fully complete ecosystem, we'll be seeing, more overseas players coming to Hong Kong, getting the license, bringing global liquidity to Hong Kong. And I think this is what is very needed in Hong Kong to further grow and develop the ecosystem sustainably.
That's why, I said at the outset that, my job is very easy. Because, I just deal with research, look at what's on the paper, and then, just say something to the government, and, the government take it or leave it. Well, luckily, they take it most of the time, but it's still very easy. Elizabeth, and the team has been doing a fantastic job, even though, it took a while to understand. And, frankly, we all took a bit of time to understand it. So kudos to you, Elizabeth. Now, Wailam, I want to look at what we can do in the future. So how does ADGM ensure that cross-border transactions, capital flow would be seamless, and how can we brush up the efficiency in that regard going forward to ensure that all those transactions are going to be safe, cleaned, and traceable of sort?
It is particularly challenging if you try to be a first mover. And in a way, ADGM has always been a first mover only because we think that it's bound to happen. Why wait? You might as well do it now, start engaging early. So most of the things that we do tend to be we are alone up there. We don't really have a reference point. So all these things about interoperability, efficiency, so on and so forth, most of the time, the thing that sort of guides us through is to really think TradFi and see how we can apply into NewFi. Right? I would say the way to future-proof is continue to engage the industry very, very closely. Right? We find ourselves learning most of the time with the industry. And they tend to be our connection and nexus between the various jurisdictions as well. Right? In fact, most of the time when we develop frameworks, it's because they come to us with a particular product, with a particular business model. We don't have a framework yet. We will then work with them. So look, please help us understand what you try to do. And we actually develop a particular framework just catering to them to begin with. And they are our guinea pigs, right? And once it works with them, we then formalize it through consultations and so on and so forth. So that was how our stablecoin framework evolved. That was how our staking framework evolved. That was how our borrowing and lending framework evolved. It all started with like-minded players who want to be serious about compliance, want to embrace compliance in the long term. They come from another jurisdiction. They sort of tell us what are the constraints in other jurisdictions. So when we work with them, right, it is being mindful of what's happening elsewhere as well, the constraints that they face, because we need to future-proof. We are part of an international standard-setting bodies, IOSCO, so on and so forth. So we do need to be a responsible global citizen, because if we decide to depart from the mainstream too much, eventually when the firms and business models try to scale, they will have difficulty scaling overseas. So I think one of the key success factor is really to be grounded at all times with the industry and also be part of the regulatory engagements at all times. So, we are, for example, we have various roundtables from FSB to the stablecoin associations and so forth. So that's how we keep ourselves updated at all times. And continue to speak with regulators and learn from regulators like Hong Kong.
I think, while you hit the nail in the head, I think the communication with participants is extremely useful. And also, we can't be an outlier. We should be dealing with the other regulators who are your peers, really. So the communication at IOSCO level or many other levels, the bilateral discussion would be extremely useful to make sure that this development in respective jurisdiction will be sustainable. Now, Elizabeth, tokenization has been quite a buzzword here and there. Have we seen anything that is successful, or any examples that we can see or you can show here in Hong Kong?
To be honest, progress has been very slow. So we issued our tokenization circulars back in 2023. It's 2025 now. And we're still talking about, can we find a real-life use case for tokenization? So I think what we've been doing in this space is that we've issued guidance. We told industry, what our regulatory expectations are. Basically, apply securities laws to tokenize securities. It's that simple, right? And then we're actively participating in HKMA's Project Ensemble. We're actually the co-lead for the Asset Management Initiative, and we're also the core member of the architecture community. So what we do, our role in the Project Ensemble is to really, give regulatory guidance to the industry on how they are structuring their tokenized securities, right? How what they need, what license do they need, what kind of, if offering to the public, they need to, get our authorization. Is this kind of regulatory guidance that we've been given. Actually, our experience in the tokenization world is actually quite similar to the digital asset market. So when we consulted on our trading platforms, the regulatory guidance, we asked industry participants to give us, more details of, for example, the derivative contracts they want to be able to, trade on platforms. We didn't receive any constructive feedback in this regard. So basically, it's like we're reaching out to industry, but we're not getting back enough. So what we're thinking about is that we want this to be market-driven. We want the market to participate more, to really respond to our requests for information so that we can work together with the market. So as Eric just mentioned just now, we're looking into, how to accelerate the growth. How can we make the market, innovate on their own and work together with us? So we're looking into launching an accelerator program within these the next few months, and hopefully we can drive more real-life use cases, whether in tokenization or whether in the other digital asset space.
This is fantastic. I have one more question for you before we come to a close. Now, my question is, interoperability is quite a challenge to not only practitioners but also regulators. So how do you ensure that is addressed or adequately addressed to ensure that the cross-border transaction is seamless?
Yeah, actually, when you talk about interoperability, there could be the G to G, there could be the industry to industry, and there could be the technology to regulator, lots sorts of various versions. So at the regulator to the regulator, I think I briefly mentioned the only way is to continue to engage. It is such a digital asset is boundaryless, right? So increasingly, we are seeing firms operating in various jurisdictions. And the only way for us to make sure that it is interoperable is continue to have conversations. We do have a challenge of sometimes convincing or explaining our position to some other regulators because, again, every jurisdiction and regulators have different priorities and considerations. So in our case, we believe in the future, the transformative power of the digital assets, and that is the outcome we're trying to move towards to. So we are very selective in terms of making sure the industry players that come to us believe in this journey and vision and want to do the right thing with us. So engagements at the regulatory front will continue, but there will be sort of, as I think Elizabeth alluded to, there will be cautious progress, which sometimes will take its time, right? Now, even at the industry to industry level, you see a bifurcation of some of these different models. Some stick to some chains, some ones their own layer one, and so on and so forth, right? Now, I think for us as a regulator, we are thinking of not just at the regulator to regulate interoperability. We are thinking of regulator to industry and regulator to technology or interoperability. So for that, to that end, I think RegTech, SupTech is a very big piece of our strategy, where we actually, because these cryptos are digitally native, it gives us an amazing opportunity to actually be able to connect with them digitally, monitor their processes and circulation and minting process online, right? So in our fiat reference tokens, in our stablecoin regime, we are able to pull, we are seeing the on-chain circulation. At the same time, we are pulling the APIs from their reserve accounts so that we are able to match real-time the sort of backing of the assets. So that's the interoperability between regulator and perhaps industry. Another example is that we actually design, we codify our rules and regulations to be machine readable with a view that smart contracts can in the future interact with our rules and regulations. So when we change our rules and regulations, the smart contracts are able to read what are the nuances in the changes and make the decisions accordingly, right? So I think those are the various longer-term interoperability initiatives as well as the shorter-term initiatives.
This is great. Elizabeth, do we have something to add, from Hong Kong side as to what are some of the initiatives that you may want to hear from the participants here in Hong Kong in terms of brushing up our competitiveness as a virtual asset or a digital asset hub?
Right, so we issued our Aspire roadmap in February this year, and as Eric mentioned just now, we still have at least half of the things that we need to implement we haven't implemented yet. So read the roadmap, you'll see that we're looking at issues like virtual asset derivatives trading on our platforms, virtual asset borrowing and lending. We're also looking at how to enhance our dialogue with the industry, because we really value that dialogue. We need to be informed of the market trends. We need to understand what the market is doing before we can come up with, balanced and well thought through kind of regulations for the industry. We're also looking at, cryptech. So we're looking at how can we do better monitoring and surveillance, because as and when we have more regimes, as and we have more players, we also will have more market activity, and we need to stay on top as a regulator. So these are the initiatives that the market can look forward to. I can't say that it will be done within a few months, but it's something that we're working on.
Thank you. Thank you very much. I want to assure you that, with these very communicative, and also prudent, and also forward-looking regulators. That explains why Abu Dhabi and Hong Kong are two leading international financial hub and also crypto activities hub. So, ladies and gentlemen, please give it up to Wailam and Elizabeth.
Thank you so much.